CleanSpark's stock price may have slipped, but behind the scenes, this Bitcoin miner is scaling aggressively and sustainably. While some investors are backing away from crypto-exposed names, others are quietly building positions in CLSK, believing the market is underestimating its potential. So, is CleanSpark's current dip a red flag or a golden opportunity? Before we break it all down, don't forget to like this video, subscribe to Stocks Telegraph, and ring the bell so you never miss a high-conviction breakdown backed by real data. Let's dive in. CleanSpark Inc. originally launched in 1987 as an energy solutions company focusing on microgrids and energy efficiency. It built a reputation for helping businesses reduce electricity costs through smart integration of solar, wind, and backup power systems. That expertise proved invaluable when CleanSpark pivoted to Bitcoin mining in 2021 by acquiring ATL data centers. Unlike many crypto miners, CleanSpark didn't just jump on the Bitcoin bandwagon. It applied its clean energy solutions to mining. The result? More sustainable, cost-efficient operations powered largely by renewables. This move transformed CleanSpark into one of the few miners positioned to ride both the clean energy and cryptocurrency megatrends. As of May 2025, CleanSpark has grown into a $2.77 billion company, with most of its revenue now generated from mining and selling Bitcoin. But it hasn't lost sight of its energy roots. Its mining facilities continue to reflect a strong commitment to environmental responsibility. In a crowded crypto mining space, CleanSpark stands apart thanks to its clean energy focus, operational control, and fast-paced expansion. Its mining centers are primarily powered by low-carbon energy sources, allowing the company to promote both sustainability and cost savings. This green approach appeals to ESG-conscious investors and regulators alike. Another key differentiator is CleanSpark's ownership model. While many miners rely on third-party hosting services, CleanSpark owns and operates all its facilities. This gives it tighter control over operations and enables quicker adaptation as market conditions evolve. Operationally, CleanSpark is scaling fast. By April 2025, its hash rate reached 42.4 exahashes per second, backed by 915 megawatts of power under contract. The company is on track to hit 50 exahashes per second by mid-year, boosted by facility expansions in Tennessee and Wyoming. Despite these strong fundamentals, CleanSpark's stock has faced pressure. As of May 22, 2025, it closed at $9.87, well below its previous highs. This drop comes even as Bitcoin has remained strong, averaging over $92,000 per coin during the same period. This mismatch suggests the market is reacting more to sentiment than performance. Crypto-related stocks have been volatile, and many investors may be taking profits or shifting capital. Analysts have responded by adjusting price targets. For example, Chardon recently lowered its target from $26 to $20, but still maintained a buy rating, citing CLSK's strong balance sheet and operational gains. In short, the stock pullback may not reflect CleanSpark's true value. It may just be a product of broader market noise. CleanSpark's growing hash rate is another sign of its strength. By March 2025, the company had already hit 42.4 exahashes per second, with an energy efficiency rating of 17.03 joules per terahash. New data center builds and expansions are set to bring in another 6.5 exahashes per second, pushing the company toward its 50 exahashes per second target. CleanSpark's build-out continues. In Tennessee, expansions at 2 sites will add 4 exahashes per second, powered by a combined 60 megawatt. In Wyoming, additional construction will add 2.5 exahashes per second. These projects underscore the company's commitment to scale without sacrificing sustainability or control. In the second quarter 2025, CleanSpark generated $181.7 million in revenue, a 62.5% jump year over year. However, it reported a net loss of $138.8 million, driven mainly by mark-to-market losses from Bitcoin price adjustments. Its adjusted EBITDA also dipped into the red, falling to $57.8 million from $181.8 million the prior year. Still, CleanSpark's asset base remains strong, totaling $2.7 billion. Its Bitcoin holdings are valued at nearly $980 million, giving it substantial liquidity and optionality as market conditions evolve. Analysts remain confident in the company's trajectory. The The consensus rating is strong buy, with an average 12-month target price of $19.50, nearly double the current price. Targets range from a conservative $12 to a bullish $27, suggesting optimism despite the near-term losses. CleanSpark isn't growing organically alone, it's also making strategic acquisitions. In 2024, the company picked up 5 mining sites in Georgia for $25.8 million, adding 60 megawatt of infrastructure. 2 more sites in Mississippi brought in an additional 16.5 megawatt. Institutional investors are taking notice. As of the latest reports, around 43% of CLSK shares are held by institutions. Over the past year, 208 institutional buyers poured in $364.79 million. Notably, big names like Vanguard and Geode Capital Management have been increasing their stakes. CleanSpark has also aligned itself with utility partners, participating in programs like the Tennessee Valley Authority's Demand Response Initiative. These collaborations not only ensure power reliability, but also reinforce the company's image as a sustainable operator. Despite its promise, CleanSpark does carry risk. Its financial results are tightly linked to Bitcoin's price. During bull runs, this works in its favor, but during downturns, it can lead to heavy losses, as seen in the second quarter 2025. Additionally, the company is seeking shareholder approval to double its authorized share count to 600 million. While this provides capital-raising flexibility, it raises the risk of dilution, something current investors will need to consider. Several upcoming catalysts could help propel CLSK higher. The approval of spot Bitcoin ETFs has already opened the doors for more institutional capital to flow into crypto. As Bitcoin prices continue to trend higher, CleanSpark stands to benefit from both increased mining profitability and asset revaluation. Finally, the company's strong ESG positioning could attract a broader base of institutional investors, especially as demand grows for clean energy exposure within the crypto sector. At under $10, CLSK appears significantly undervalued. Alpha Spread estimates the stock's intrinsic value at $16.811, while Wall Street targets hover near $20. That suggests 100% plus upside potential for investors willing to weather the volatility. Of course, risks remain, especially tied to Bitcoin price swings, regulatory scrutiny, and dilution from potential capital raises. But for investors who believe in the long-term viability of cryptocurrency and are aligned with ESG principles, CleanSpark may be one of the most compelling plays in the mining space. It may be flying under the radar today, but if Bitcoin breaks out again, CLSK could erupt with it. If you got value from this breakdown, don't forget to hit that like button and subscribe to Stocks Telegraph. Drop your thoughts in the comments. Are you bullish on CleanSpark or staying cautious? Let's talk about it. Thanks for watching, and we'll see you in the next one.